Well, I think, Brian, what you're seeing is so many people, and you just look at the last 2 days. One headline takes us down, the next headline takes us up. I think for most investors, it's really difficult to follow this. And, if you're going to swing on the emotions of day to day, there is that set of investors that this is great. They love to do more trading, trade the volatility. But for most people watching your show, what I would say is still continue to pay attention to earnings. Now, tariffs may affect some of the companies you own or you hold, but really, what are they saying in their earnings calls? What are they saying for future possibilities? That's what, earnings drive stocks, and that's what actually matters. So what I would say to most people is, headline risk, if you're going to pay attention to it every day, will probably drive most people mad.
It's hard not to be a little nervous, though, JJ. I mean, the headlines are pretty severe when the president is tweeting out things like, "We'll end Iran." I mean, that's a scary headline.
It is a scary headline, but I would say let's look at what's going on in the market with volatility and how's the market pricing that in. The VIX that you show on the screen all day long here is still, below 16 this morning. And so with that, what the market's telling you is, yes, there is a repricing of stocks going on right now on some of the expectations, but it's not a severe, oh, my God, I have to sell everything. It's going to be terrible. I think what people do have to get used to is this is probably going to take longer than anybody thought. These things take a long time to work through the system, and there's going to be a lot of back and forth between that. I think what you have to do as the individual investor is decide what kind of effect is this going to have on the holdings I have. Not to say that, some tariffs won't have an effect, and if China devalues their currency, et cetera, there's going to be a lot that continues to go on. What's difficult is we're not used to necessarily watching how the sausage is being made, so to speak, and that you're seeing the negotiations go on right in front of your eyes.
But what if the market is wrong and we do not get a resolution? Everyone's like, oh, don't worry, we'll get a resolution, of course, because it's bad for both. By the way, we've seen many outcomes in human history, JJ, where the best possible scenario didn't happen, where both sides actually got shot.
Well, you know what? I agree with you on that, Brian. And that's why I'm saying it's going to take longer than people think. Because let's look at, just the small history of this so far. It looked like about 4 weeks ago we were going to come to some sort of resolution. But what happened? Both sides, as we got closer and closer to negotiating through this, their economic numbers started to improve, and that emboldened both sides, and it was suddenly like, maybe I don't need you as much as I thought. I think what's going to end up happening is both numbers are going to sort of start to depreciate a little bit, and with that, that's what tends to bring people back to the table.